All right, all right. Hola, guys. Que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Quick update on Bitcoin. We've had some, well, there really hasn't been a lot going on, just more crab movement in this area here underneath the macro trend resistance. I'm saying that this area where we are now is considered another LPSY area that would correlate to this in 2021B. Clearly, you could see the same waves being retraced over. You had this all-time high area, which would correspond here, of course, today. So kind of like this double top here, this all-time high, or this UTAD, and then here this would be the LPSY, the beginning of the LPSY area, last points of supply. That would correspond to this area here, and then we had the sell-off here. It was much more delineated in 2021, as is these waves in this second redistribution area where we currently are. I contend that this area here is this area here. This is just more kind of spaced out, and the waves are more, let's just say, refined. To count out, you could actually count this ABC here, whereas here it's not as clear. And also the waves here are all taking place underneath the anchored VWAP, whereas here the anchored VWAP is going right through the redistribution. But I do think that the candles are generally underneath. The effort is not to go under, but the effort is from the bulls. It's on the bulls' side now to keep their head above the anchored VWAP, which they weren't able to do yesterday. We had this area of crabbing that took place over the last few days. This narrow spread area that's like this here, where eventually we went under. We fell under, but not before several attempts. Kind of like we had several attempts at the macro trend resistance. We're going to see that as this thing redistributes. We're going to see efforts on either side, to the upside and to the downside. And the reason for those is just liquidity sweeping. Market makers, I believe, are bearish, and they've already got their shorts in place. But you got to remember that they're also, not only are they looking to take out retail, but market makers look out to take out other market makers. So there's not this grand kind of conspiratorial effort of all the market makers on the same side. No, market makers, whales fight each other too. And so before they can embark upon a macro movement, either to the upside or to the downside, liquidity must be had first. It doesn't matter if the liquidity is from retail or from the bigger fish. Liquidity is liquidity. And so they're trying to outfox each other and outsmart each other and out, second guess each other's movements. So and this right here was indecision, but we already know from the VSA what the end game is of this. And we see predominance of supply, just like we saw in the latter half of this regression trend back from 2021. You see the clear predominance of supply in the vertical bar volume here, beginning at this UTAD. You don't see any more predominance of demand like we saw in the beginning of the schematics, starting at the PSY area. You see how demand predominated here, and then right after the all-time high at the beginning of this regression trend, we see nothing but predominance of supply. Let's compare that to today's range, and you see the same predominance of demand beginning with the PSY. It's where the market makers and informed interest put on the brakes of the pump, and they begin their distribution efforts. This is the commencement of it, but we see the sweeping waves to the upside, to the macro trend resistance and down. But then something happens after the structure gets broken and the price goes beneath the ice. If you see for the first time here, which is at this one wave on both, we begin to see supply emerge now. And gradually, slowly but steadily, supply begins to predominate now. And I think you could see that in the range for 2025 as well. You see right after here, right after the candles went under the anchored VWAP or the ice, we see supply beginning to emerge. And not only that, but also grow in intensity while demand continues to diminish. And we see that, and it follows it through all the way to the end of the distribution here. And so we're also seeing predominance of supply in the distribution range here in these redistributions starting at the all-time high, the first LPSY, second LPSY, same as in 2021. And so, yeah, this, of course, I mean, you could tell that they're similar. The play out, the waves have been playing out. It's just been completely similar, and I don't think there can be any doubt of that. I used the replay bars and I cut it off right to kind of where I think we are in the correlation of the historical schematic. But if we play it, you'll see, and you already know what happens after this. And so before I play it, though, I want to kind of look at a catalyst that is quite obvious that I think is going to precipitate the sell-off that's coming. I think it's unavoidable. I think before the sell-off happens, we can have more attempts into the macro trend resistance line, kind of like we saw here. There were several before finally capitulated and sold off, and I can see that also. I think that there's just a lot of ferocity right now on the bulls side as well as the bears, and it's just really going at it, of course, and it's right on the razor's edge, right on the anchored VWAP. At least here 4 years ago, everything was well below the anchored VWAP, well below the ice. It was pretty obvious what the end game was here, but you know, in today's day and age, in today's market, it's not so clear cut, right? Because you've got this, like we said, this anchored VWAP going right through the redistribution. But and so, like, you know, yesterday we had these up thrusts, this big one yesterday that, you know, when you have it on a lower time frame, these schematics, like on a 30-minute and lower, these up thrusts, they look very impressive. They look very powerful. But then when you zoom out and you get out to a proper macro look, it just looks as what they really are. It shows them to what they really are. Just, you know, throw over into the macro trend, into the macro trend resistance, which quickly diffuses, and then we could identify it as a liquidity raid or a liquidity sweep to the upside. And then we see the same thing happen in the opposite direction, like we see here, and then it promptly comes back up to the magnification of the magnitude and the magnetic pull of the anchored VWAP, which is why we see it on both. It's kind of like equidistant. There's equilibrium here, but at some point something's got to give. And of course, if you've been following this channel, you know that we're bearish long term on this. I think it's going to retrace. We're going to see some lows come in, at least down to the 618 Fibonacci retracement level, mid to low 80s. But something has to catalyze that sort of move, and I believe it's going to have something to do with the tariffs, something to do with just the economic general upheaval of the world, also tying into that stuff going on in the Middle East with Gaza and Hamas and the Palestinian relocation and the threats there of military actions that could take place. All that together, plus the trade wars with China and the tariff threats on the European Union and Mexico and Canada, certainly doesn't help it. And I think all of these are going to just come, it's like bottlenecked right now, but it's all going to just explode at some point, and it's going to result in a in a recession. I believe that. And so this is from the Council of Foreign Relations, and So I was just kind of looking over this, and it's kind of echoing the sentiment of, this is global now. If escalating rounds of tariffs and retaliation need not set off a fresh inflationary spiral alone, there is also no argument to be made that they are disinflationary. Indeed, the only way a trade war helps the Federal Reserve reach its mandated 2% inflation target is through a sharp recession. Okay, I want that to sink in, guys. This is not written. This is not from the White House. This is the Council of Foreign Relations. Okay, writing this, and it's being very critical of the Trump administration and how it's basically wreaking havoc. It's threatening to wreak havoc in the civilized world. So with its economic threats through tariffs and such, and retaliatory tariffs and such. So the Trump administration has lauded tariffs as a policy panacea, but rising uncertainty around global trade will make it all the more difficult to bring inflation under control. So they're basically dooming the inflation, that the inflation is going to cause a recession, and then if the recession becomes full blown, it's going to affect the United States as well, and it's going to tank the markets. And so that could be just the catalyst that we need to bring about something like this. We saw this is what happened, and I think this is what is inevitable. We're going to be seeing some action like this quite soon. I don't have a time frame, but I believe it's within the next 2 weeks or so, two to 3 weeks. We're going to see a markdown on the macro sense. They can only make so many attempts at the Macrotrend resistance before the levee breaks and everything falls through. And so this is something I think we just have to prepare for. And it is certainly feasible, and historically and technically, the waves so far have played out almost to a T as to where we currently sit. There's no reason whatsoever why this is not feasible. Something like this is not feasible, especially considering the current global problems that we have right now with the economy, the global, just everything. I mean, we just read it. It's not just the United States. It's not something just germane to crypto. This is much bigger. It involves global economies, global reserves, and the tariffs of just all over the world. In the largest and most wealthiest countries of the world are going to be affected by this. So I don't think we'll stay down long when it happens, but it will be just enough to bring this into play. Something like this to create just a big macro sell-off and an occasion for informed interests to really shake out retail or any bag holders that bought this LPSY, these LPSYs. So I mean, once the sign of weakness, once the SOW kicks in, there's going to be the retails that were very obstinate and holding on to their bags that they bought here, thinking that we're going to make a new all-time high to 120,000 or whatever such. I think the dawning reality, once something like this strikes, they're going to be forced to panic sell and capitulate, and that's where informed interests are going to be reabsorbing crypto, and I don't think we're going to stay there long. I think we'll shoot up after that, but there will be a period of reconsolidation like we see here. And during that time, I think the altcoins, which will also bleed out, but perhaps not as profusely as Bitcoin, will see their reversals as well before Bitcoin does, and the altcoins will have a chance to rally. And many of them, I'm not in any alts right now because I think there's going to be more bleed out coming. And so I want to catch it. I want to catch them once Bitcoin retraces through the preliminary supply liquidity void, this order block down here at the mark of the PSY. Once we hit that 89 point or 90, I'll be watching the alts as well and setting limit buys where they've retraced to, and I'm going to kind of count that as the bottom of the alts. Bitcoin can still go down, but I think the PSY area, if Bitcoin hits 90 or below, I think then I'm going to start taking preliminary entries in many of the alts, and I'll be sharing them in my Discord group. So if you're interested, you can check us out through Patreon. I have a private Discord group. If not, like, subscribe. You'll continue to get updates on Bitcoin until the macro retracements, and then I'll start doing alts. But the majority of the alts are going to be in my Discord trading group. So I don't really put a lot of my swings on YouTube. I reserve them for patrons who have subscribed. And so anyway, all right, I'm going to let you guys go. That's enough from me. Thank you. I hope you enjoyed this. None of what I said is financial advice. Have a great rest of your Sunday. God bless you. Be safe in the markets. Adios. Bye-bye.